Good morning, everyone. This is daily trading analysis with the weekly recap for this week, which has been a little bit strange, really difficult to trade, and with not a lot of economic data. So we don't have a lot of catalysts to really push the market, either side. So we are going to review the economic data. We had Tesla earnings, which was the biggest catalyst of the week. Technology was pushing the Nasdaq a little bit up, but suddenly, suddenly on Friday, everything faded. And it was because of banks. Financials were dragging down the entire market, and we finished the week in a very interesting way. It's really interesting to see how now the Nasdaq is showing weakness, but also the ES. So I really encourage you to review all the markets that I'm going to show you because things are not looking strong. By the fact that sometimes we got a big pushes intraday, the overall picture is not looking good. So we are going to review that also. But first, the economic data real quick. Monday, we got no news. Basically, the only thing that I would like to highlight is the 3 month and 6 months bill auctions, which are at least in the longer term. For the 6 months, it's pushing a little bit higher. For Tuesday, Richmond Fed manufacturing red, still in the negative, which is cooling down the economy. Okay, that's new data. But on Wednesday, things started to go south with this 30-year mortgage at the same level rate and applications plummeting, minus 6.7. And also, existing home sales, look at this, minus 1% on the month. And it's really, it's if we get the bigger picture on the 10-year, we are really, really low on that. And it is what it is. There's no demand. So that's one of the sectors that is struggling a lot. Thursday, we got building permits also 3.1 in the negative. Chicago Fed national activity in negative. Initial jobless claims going lower. And the S&P Global Composite Manufacturing and Services were the main figure that day on Thursday. And we got basically the same in all three. So no news in terms of that. That's an estimate for October. And excuse me, new home sales. This is now pushing a bit. So existing home sales is one thing, new home sales is another. It's new business, new permits, and the 30-year mortgage rate, look at this, is going higher. So that's not good, right? Friday, finally, durable order goods was in the negative month over month, excluding defense in the negative, and then the Michigan consumer sentiment and expectations 70, which was mainly the previous one, 3% still, so going ticking lower a bit. That's good sign. And consumer expectations 74. That pushed the market higher, but then we got the Friday sell-off into afternoon. So we are going to review that exactly. First thing is that the Nasdaq is on the daily. It has, we started, this is the week, these 5 days. This was the Wednesday, Thursday, nothing. And then we tried to push higher and we ended up the week with this kind of candle, which is, again, I'm repeating myself here, which is inside the inverse fair value gap, which is holding back the entire price action, not only on the daily, but also on the weekly. The weekly, we also have, look at the bodies, we also have this sign on higher time frame. So there's something holding back here. And now the ES is back, it's approaching the previous pivot on the weekly, but on the daily, it's really showing. Look at this week. This week for the ES, it's the first week in 1, 2, 3, 4, 5, 6. On the 7th week, we got a minus 1% week. So on the daily, we have this candle and we have all these levels, relative equal highs, which I'm really scared of, because if we push this pivot, if we push this pivot, we might enter in grabbing at 5,700. So for the ES, for the Nasdaq, we are still the same. The 1 hour was squeezing on Friday, and we finally, let me just show you, we took this liquidity and basically sold off. The Nasdaq was really pushing because Tesla had an incredible week. Incredible week. Look at the daily. Tesla was pushing on big earnings release. Google was also pushing, but still stuck. Apple is holding. Microsoft, it's middle of the range. Tesla, big push. Amazon, ranging. Google, it's ranging. Nvidia is trying to be the first market cap stock in the entire market. And Meta also trying to hold these highs. The Nasdaq was really trying to hold. The tech sector was good, but then something happened. What happened? Well, if we check XLF, we know that it started on 1 minute. We saw that it started really. Thing happened for the Russell. Russell was dragging down. The XLF were both dragging down the ES. It started a little bit higher, but then starting at 10 balance, it just was weakness after. Look at these numbers. JP Morgan in the red, -1%. Bank of America, Wells Fargo, Morgan Stanley. Goldman Sachs, -2%. Even KRE, regional sector banking ETF, -1.80. So it was only semiconductors and tech which was pushing us on Friday. So Nasdaq was trying, but it couldn't hold these levels. More weakness. And if we have here the new week opening gap, we are basically there. We are basically there. We opened the week and we finished the week as we started. It's just 0.07 flat week. So let's go back to the 1 minute to really see some nuances that I would like to show you. So as I was saying, the Thursday was big excess to the downside. Then during the overnight, we were trying to Friday. I tried to get in on some kind of pullback, but it was not giving me the proper setup. It was super choppy. So let me just remove as we go along. Took this order block. We also started pushing. The market high was taken, and then the new week opening hack was, look at this bounce. New week opening gap pushed directly into liquidity. So this was a nice zone to take some long, but I couldn't jump in. There was no pullback. It was just straight up. So once we took this liquidity up here, which was the higher time frame, this one, I was just, I don't see further. There's more risk than potential profit. We also took the 15, but I was really looking, okay, let's see how we finish, because we have the daily inverse, we have the weekly inverse, and we have this range which we left, but we ended up in this same range, expecting the inverse in both the daily and the weekly. So that's really complicating things into the forecast, because I don't know about you guys, but these kind of false breakouts are not good at all. These kind of things that are pushing and then you have a false breakout of the range, as we have here. Tell me, what do you think about this? Not good. not good. So the first thing that I want to check is this low and the Fibonacci into the high. So let's go to the 1 hour to see if we have some inverse. We have this inverse. So inverse fair value gap on 1 hour is going to be my reference, at least on higher time frame for next week. We have that. Then down here, we only have these, which we bounced from. So that's pretty interesting. We have another here, but it's not really. Where and then let me also adjust the weekly ranges, which basically expanded a bit, but are not really super interesting for us here. So we are in this middle. So in between these both ranges, look at where we are in the middle, right in the middle. So patience, we have to wait. We have to wait. That's all. Because the market is just manipulating in both sides. It has no direction because it has no catalyst, and big earnings are coming. So where can we go in this market? So I don't have critical levels. The only thing I have is inverse, and then we have all this liquidity that was built up. So we have one option, which is try to go higher, reject, and then start taking all this liquidity down here. That's my I think this is what's going to happen. If not, I will try to get in some kind of trend on the week above last week high, which is this week's high. So that's my thing. That there's no more I can see in these charts. We need more structure. We need way more structure. So let me show you what are we expecting for next week, because next week is going to be pretty interesting. We have the jolts on Tuesday. We have GDP growth on Wednesday. We have ECE and income and spending Thursday. We have NFP and rate and manufacturing. Next week is going to be extremely volatile, and we are going to see moves. So that's what we were waiting. We are waiting all this chop for this catalyst. And we also have earnings. We are going to cover everything, but put in your head patience, discipline, and risk management in order for the price action to show you when it's really prepared to pick a direction. And I think that's all you need to hear. Sadly, I don't have anything else for you to any magical level because there's none. There's none. This market is requiring you to be patient. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. These are my weekly recaps on Saturday, and these are really interesting. So if you like this, welcome to my channel. And also Monday through Friday, I have daily recaps for market forecasts, market updates, and market recaps. Thank you for your time. Remember, patience, discipline, risk management are key for your success in this. Stay safe, everyone. Have a nice weekend and see you on Monday.